Inflation for the month of August came in at 4%, lower than the central bank's usual threshold of 5 to 7%. And this was mainly because of a slight reduction in food prices during the month, and also because of the large base effect stemming from the higher prices that prevailed during August 2022. As a result, we also saw the central bank governor stressing on the fact that there is a possibility of further reduction in terms of policy rates that could happen over the next couple of months, and also an uptick in terms of credit or demand for loans, which could materialize in the coming months with the reduction in terms of interest rates that we've seen over the last few weeks. The AWPLR, or the average weighted prime lending rate, which was hovering above 20% for the longest period of time, has reduced below 16% last week. And with the reduction in terms of the lending rates, we expect the appetite for demand or the appetite for credit to pick up in the next couple of weeks. Also, from a currency perspective, the currency was stable with the rupee hovering at about 320 rupees to the dollar. And this was despite the Central Bank of Sri Lanka settling roughly about $100 million to the Central Bank of Bangladesh on the swap that we received last year. Subsequent to the settlement of this $100 million, Sri Lanka will owe only about $50 million to the Central Bank of Bangladesh. And the ability to kind of repay these swap facilities is due to the improvement in balance of payment that we've seen over the last couple of months. Sri Lanka's balance of payments improved to above $2 billion by the end of July, higher than $1.95 billion the previous month. And we expect this trend to continue with the postponement of debt payments and the slowdown that we've seen on the import bill. Tourism has also been helping the cause, with August tourism numbers being reported at 136,000 versus the first 6 months average of about 113,000 arrivals. From an interest rate perspective, we saw the treasury bill rates remaining flat, but going into the next couple of weeks, with the parliament likely to approve the domestic debt restructuring in the next couple of weeks, we expect the completion of the program to take place by the end of the month, which will result in a reduction in terms of the risk premium attached to treasury bills and treasury bonds. And as a result, we expect the trend in terms of interest rates reduction to continue over the next couple of months.